Welcome to Markets Now. I'm Michelle Work along with Darren Frye, Water Street Solutions. Kind of a mixed day in both grain and livestock futures on the close. But Darren, let's start off talking about the corn market. We've been putting in some risk or weather premium the last few days. How much risk premium do you think we need in these markets?
Well, I think we had some prior to this rally in the corn market still, given how demand is. We're really behind on exports, but also with the ethanol data today, I would say that we're behind and getting farther behind on ethanol grind. So I do think the demand is not great, and I think the supply looks good as long as we start getting rain here by mid-June. And I don't know if we need a lot more weather premium in the market. This rally took us up into chart resistance at 521 to 531 versus D's, 585 to 595 versus July. Looking for this market to struggle here as we move into midweek into the end of the week, as long as we see these weather models roll forward with a little bit more moisture in them, because right now the next 2 weeks are pretty dry.
Yeah, but it is too early really to be shaving yield yet on the corn, right?
Yeah, I think so. I mean, I don't know how you shave a lot of yield when corn's 3 to 6, 8, 9 inches tall. I know those areas like eastern Nebraska and some places in central Illinois, central Indiana, the farmers are worried. They are seeing some crop stress, but it's not probably going to hurt them if we can get rain here in the next 10 to 15 days and begin to turn more moist after that as we move into July. Things will be good.
So do you think we could rally the corn market farther, though, than the fundamentals might suggest, just because the funds are so short right now?
It's always possible. They are short, and that's some of what I don't, why we didn't probably see beans rally here with the same corn rally. They're short corn. They're short a little bit of beans, but they're still long meal, and they're short a little bit of oil. But the oil seeds just didn't lift their head much, and corn did. But I think also if we're going to be dry and hot, it's going to affect corn more. Beans are made more in August and a little too far out to know what's going to happen there. So the concern here for weather, I think, is more immediate and more for corn.
And that's really overriding some of the bullishness with the old crop basis levels and cash prices still being pretty solid.
Yeah, it is. I think if anything, new crop pulls old crop down. We are seeing old crop, spreads still be firm, and we know basis is weakening in the east, but has remained strong out west. That's just the nature of how short the inventory was out there and where ethanol and livestock is. And so we're going to continue to see that until we get new crop supplies, I think.
You bet. So yesterday we saw some profit taking in the beans, technically didn't have a very good close. Is that why we weren't able to follow corn today, or what?
Yeah, we had reversals in soybeans, meal, and oil. And today we challenged those upper areas of those reversals, but held and then fell back down again. And I just think the oil seeds have a lot more pressure on them. When you look at what's going on with the crude oil market, and of course the crude palm oil market, soybean oil doesn't have a lot to write home about. And you look at where we are with exports and sales. While export shipments are ahead, sales are behind. And as we move forward in this last quarter, we're going to see those come together, and we're going to finally see shipments be behind because we just haven't sold it. And so if anything, I think the government could come out here on some of these subsequent reports and actually decrease the exports for soybeans, increasing that carry out toward 300 million before it's all said and done.
Yeah, certainly we haven't had a bullish enough story to push over those resistance areas that we just talked about. So the wheat market setting back, and is that market taking out weather premium? And if so, have we taken out too much at this point?
Yeah, the weather premium is coming out of there as well. I mean, the rains out west, a lot of people thinking those are going to help, and I'm sure they will. They're certainly going to help summer crops, but they're also proving to be some problems for the poor wheat stands. If you look at some of those thin stands, got a lot of weed pressure coming up. In addition to that, you have a lot more disease pressure. So I don't know how that wheat crop's going to turn out. There's going to be more abandonment, and I think yields are going to be pretty poor, especially west of Wichita. So time will tell, but I think the summer crops are set up much better now that they're getting more moisture out there.
But even so, demand is not really helping the market situation, especially when you look at the fact that we're importing wheat into the
Yeah,
US.
that's absolutely correct. Between importing and blending, we're stretching that short inventory out, and there just isn't a lot to be excited about. And Russia just keeps going lower on their wheat prices, and the direction of Russia is the direction of kind of all the other world wheat markets. So I just don't see a lot right now to lift Kansas City market up, or Chicago, which is headed for a big crop, by the way. And of course, the spring wheat will get planted. I'm sure there'll be some that doesn't, but things are starting to look pretty good up in the northern plains here.
And that cotton market got pummeled today, and that's really a function of what we just talked about with wheat, just taking out weather premium again, right?
Yeah, all that rain coming into Texas, Oklahoma, Kansas, that's really going to help the cotton crop. And I know we got 15.5 million bale planned, but we could push 16.5 with all this rain. And so we've been in a big drought for a long time down in the west, southwest plains area. And this is certainly starting to change the pattern and improve the possibilities for not only, crops next year, but summer crops this year, and of course, cotton.
Live cattle to the plus side, and that was really a function of some higher cash. We had like up to 171 cash trade in the South here today, didn't we?
Yeah, we did. We had a short show list here this week. Numbers were down, and the cash has finally gotten established. It's higher, and we really seen the moisture maybe hold some of the feeder calves off of the feed yards. They're just staying on grass longer, and so all that has helped bolster these markets. We did see reversals for down yesterday in both fats and in feeders, but those were negated by the time we got to the close here. In fact, deferred feeders from October on out all made new contract highs.
You bet. And we've got November feeders now over like the 240 mark. And so how much farther do you think we can push that market?
Well, markets can continue to run further than you think. And obviously there's a lot of exuberance and emotions around these markets. And the fundamentals are still good for cattle as the numbers are really tight and going to get tighter into our fourth quarter. However, we do have 5 waves up. It is a terminal wave pattern. And when it is over, it will fall. But right now, there's no sign of that. We still could go a little bit higher here in both fats and feeders.
Yeah. And I mentioned the Southern cash trade at 171, but the North was actually even much higher than that. I think we had some 181 and 284 to 285. So that market's been running premium, and that probably will continue for a while, don't you think?
Yeah, it's hot up there. The winter was just not kind to them on numbers or weight gains. And so
Right.
that's been a market that's been $10, $15 above anything else. So it'll continue to be that way, I think, until we get a change in supply or a change in demand.
Hogs, more new contract lows in the front months. What's it going to take to turn that market, Darren?
I think this Prop 12 Supreme Court ruling making that law, that's tough. California uses 12% of the pork here domestically, and just not a lot can comply with that. So I think it's a demand issue. The charts have been pointing down to a lower level here for some time, and we kind of think that July has a chance into the lower 70s here before it's all said and done, and then some type of rally will take place after that. But then on down into fourth quarter, I think we're just going to have to see a lot of liquidation to get this thing turned around. Longer term, it's bullish, but shorter term, I think it's still pretty bearish here in the pork complex.
Thanks so much for joining us, Darren Frye, Water Street Solutions, and that's Markets Now.